markets. In its latest policy announcement, the U.S. Federal Reserve has chosen to maintain its key borrowing rate at 5.25%.
Exactly. However, what has sent ripples through financial markets is the notably hawkish tone struck by Federal Reserve Chair Jerome Powell. Powell has hinted that interest rates could remain at elevated levels for an extended period of time, and he has not ruled out the possibility of another rate hike within the year.
Right, and this development has raised concerns among investors, especially in emerging markets like India. Does this mean it's time to churn your portfolio? Take a look at this next report to find out.
The United States Federal Reserve has kept its key borrowing rate at 5.25% in its latest policy announcement. What's spooking markets is a hawkish tone. Federal Reserve Chair Jerome Powell said that interest rates could remain at historic high levels for longer and has not ruled out another rate hike this year. That's got investors, especially in emerging markets like India, concerned. And that's because rising U.S. bonds yields make Indian assets less attractive to foreign investors, leading to outflows from the Indian stock market. The Indian rupee is likely to depreciate against the US dollar as the Fed raises interest rates. This will make imports more expensive and hurt the profitability of Indian companies that rely on imported inputs. High interest rates in the US could lead to a slowdown in economic growth, which would have a knock-on effect on the global economy, including India. This could hurt the earnings of Indian companies and lead to a decline in stock prices. Despite the short-term challenges posed by the Fed's hawkish stance, India remains attractive for long-term investors. India's strong economic fundamentals, such as a young and growing population, a rising middle class, and a favorable investment climate, continue to make it a compelling investment destination. The overall outlook for Indian markets in the near term will depend on a number of factors, including the pace and magnitude of Fed rate hikes, the strength of global economy, and performance of corporate earnings. In the short term, Indian markets could experience some volatility as investors adjust to high interest rates. However, over the long term, Indian markets are well positioned to benefit from the country's strong economic fundamentals. Bureau Report, WION World is One.
WION is now available in your country. Download the app now. Get all the news on the move.